you've mentioned this concept of you said you said this term, the democratization of investing, a few times. I wanted to kind of bring the attention to this topic because we hear that as well. We want to be able to allow everybody to invest with us, but the regulatory framework does not allow that. And some of it makes sense, but there's two main schools of thoughts when it comes to this idea of everybody having the opportunity to invest into any deal they wish. You have the school of thought that, private investments should be reserved for the financial savvy. It should be reserved for high net worth investors, high income earners, people who are, very financially literate, and the common man, the blue collar, shouldn't come over, play over here. They should stay in their own sandbox. And I would say 95% of people, both in Canada and the US, are non-accredited. So they don't have an option to get access to these investments. You also have this school of thought that everybody should be able to invest into anything they want. And the argument they use is that, hey, if today a blue collar guy, a mechanic or a teacher wants to go and empty out their bank account and go and buy any type of stock they want online, they can do that by a click of a button. Why can't they invest in an exempt market or private placement type of product that is known in the US? In Canada, it's known as exempt market. In the US, private placement. We'll go over that in a moment to distinguish between the two. But yeah, these private companies, why can't everybody, as they can invest in Wall Street, why can't they invest in this in a private company? What is, you've been in this space for a while now. You've talked about democratization. What is Peter Paul's view on this topic? How do you see it?
So the whole idea, if you look at the public markets, where we actually have seen retail investors, enter the public market. So really, stocks, bonds, everything that's publicly trading, that used to be dominated by institutional players as well, and that has dramatically changed across the globe. Where you have online investing platforms where anybody can basically, to your point, invest in public stocks as they like, and so they already have access to investing in these in public securities. So it raises the question as well, in private markets, which is a different asset class, which depends on what you invest in, but it's typically has a higher risk, but also, as discussed, potentially higher returns. Why would the same public not have access to those investment opportunities? And in fact, if you sort of look at it from a portfolio perspective, roughly having about 10% in private market securities in the total portfolio is recommendable. So how is it that retail investors are locked out from investing in private markets, where it makes sense to perhaps allocate a proportion to that? And the other perspective I would bring in here, which I think is really important, is that as we mentioned, newly found companies that resolve a problem that has a potential to really go global and become really successful, there is obviously upside for investors. And so why would, again, retail investors not be able to invest in those kind of opportunities? Why are they traditionally only able to invest in, we talked about Facebook early on, when it goes public, when we all know that the massive returns were created, in the earlier days, or at least by the investors that were able to participate earlier? So not fair, is it, really? So why wouldn't retail investors have access to that? So that is what I strongly believe, and this is also why it excited me to start FrontFundr, is the fact that that you basically give the wider audience, give retail investors the opportunity to invest in companies that they're excited about, that they believe in, and that they like to see succeed. Now, to your point, does it mean that they go in FrontFundr, watch your video, and say, "Oh, cool, this can only go well, and I'm indeed gonna take my whole bank account and put all my money in this company because surely it's gonna go through the roof"? Probably not very wise. And that's also why FrontFundr we're registered. You mentioned exempt market dealer. We're a registered dealer. We're actually the first registered EMD in Canada to transact fully online. And so we've been doing quite a bit of pioneering in early days, working with the regulators and getting the approval to transact from start to finish online. And at the same time, make sure we comply with all the securities rules and all of that. Part of those rules is that we also have an obligation to determine, based on investors' profile, whether it's a wise idea to make a certain investment and a certain amount in one company. So for each investment of FrontFundr, we perform a so-called suitability. So that's why we need to know a bit more about the investor, about their risk tolerance, about their assets, their investment experience. And so if we see an investor that investing $50,000 of a total investable asset of $100,000, we will deem that unsuitable and will notify the investors, say, hey, you might want to diversify and perhaps invest less and, sort of spread your risk, basically. So we do have an obligation and a role there to educate both and help both the investors, but also companies that raise through the platform. So it's not sort of a Wild West, like, hey, we list like a Craigslist, list anything and see if it sticks and anybody can invest as much as they want. We are basically running a sort of a curated marketplace on both sides.
Sure. You gave a very diplomatic answer, Peter Paul. But just to summarize, so you believe in democratization of investing into private companies, private placement as is known in the US, exempt market as is known in Canada, with a caveat, with a but. Most lawyers answer that way, with a but that there should be some level of regulatory framework where people can't come in and just empty out their whole bank account. So there should be there's levels to it, in basically what you're saying.